Bitcoin is surging on this shutdown. We're going to go into where the market goes from here. Welcome back into the show. Let's get started today. I want to thank our sponsor, and that is iTrust Capital. You guys can learn a lot about iTrust by visiting their website, itrustcapital.com. But of course, some of the biggest news they've had out there is they have extended their staking program with Ethereum. So there are some big opportunities here for premium custody accounts and also tax-advantaged crypto IRAs. One of the things I want to focus on, the launch builds momentum of iTrust Capital staking program, which began with Solana earlier this year. And now they're adding Ethereum, one of the most widely used and trusted blockchains out there. So you guys can do that over in your iTrust account. Interesting model here because you'll be able to do this right from the iTrust Capital dashboard, just a few clicks. So it makes it one of the easiest ways to get into staking within a crypto IRA. So make sure and check out the link. We'll always leave that down there. You can get up to $100 in funding reward to get started. All right, so let's jump into our first point right here, and this is when the government will shut down will end. Right now, Poly Market is pushing for around October 15th or later at 39% right now. This could elevate even longer, guys. So I'm kind of curious if you think we're going to see a long-term government shutdown of 35 days. Remember, that was the last one. Let me know in the comments down below. One other point I want to hit at right here is the Republicans were an absolute no-show, as you can kind of see the chamber right there. Full House attendance of House Democrats right there. It looks to be one lone Republican. I'm not sure who that is. It might be Warren Davidson, but interesting that the Republicans have no interest in being able to negotiate this out. And of course, the Democrats are out there pushing for this. So we'll see how this plays out. Again, I don't know if this is going to push us into a longer-term government shutdown, but the market seems like it has got a strategy of how to play it. Watch this clip, SOT 1.
Yesterday, we saw all of the equities averages hitting all-time highs despite this government shutdown. What does that tell you?
Yeah, I guess, Becky, the question is it despite the government shutdown, or is it in part because everybody knows the history of government shutdowns when it comes to the market, and there has tended not to be that much of an impact on balance. In fact, the market has done okay during the duration of the shutdowns, although there is a little bit of an asterisk there, which is typically the market has declined on average into the moment the government shut down a little bit. This time we didn't do that. We're at all-time highs. I think we're seizing on the same sources of upside strength, which is obviously the AI excitement that's got semiconductors going wild, global rallies in all markets, by the way. You look at Korea, look at the rest of the world, and then just the general certainty about where interest rates are, where they're likely headed, and I guess a little bit of a faith that this soft patch that we're seeing in the labor market data and some of the consumer stocks is not telling us that a broader downturn is coming. So I think you put all that together, and the market said, new quarter, same story.
New quarter, same story. He did mention some stuff there on jobs. Before I jump to that, just take a look at Bitcoin. I mean, we're, of course, edging over 120K here as we record this. Bitcoin holding up somewhat consistent here going into a new order block. I'm anticipating we are going to see an all-time high for Bitcoin here in October. The real question is to what extent. We'll cover more on that in a second. Other thing I want to showcase, because he hit on that, and that is if you look at the S&P 500 right now edging out at 6,700, over 6,700 as we record, another all-time high as we continue to break these over the last several months. So this is to the point is that right now Wall Street is not shaken by this shutdown at all. Now the real question would be, do jobs get impacted? Because this will have a large impact on government jobs. A lot of jobs that correlate to that industry, meaning they are servicing the industry, meaning the government industry, as well as the impact on the economic structure that we're already seeing where jobs numbers are not necessarily going to be reported. So it's going to be kind of flying blind here for a little while. I want to go to a clip right here that kind of gets into that. Take a look.
What do we do with a Fed that is hyper data dependent when they don't have data? Right. What do we do in an economy where you're increasingly reliant on policies coming out of Washington, and Washington's increasingly acrimonious? And the big number in our mind is October 17th. That's the reference week for jobs. Right. So if this extends beyond October 17th, you will see a big impact to the October unemployment rate. Could be as high as 4.8%. But it's a blip, Becky. Then we're going to get back down to the low unemployment rate environment. This is all going to create some waves for the economy, and it depends really how long it lasts. We're talking about areas that service those furloughed workers. Do they make big decision makers? And at the end of the day, when you're in these periods of heightened uncertainty, we don't anticipate that businesses are going to take big risks. They're not going to know exactly what the policies coming out of Washington are going to look like. So it's really difficult to drum up business confidence. That's harder for economists to measure, but we know it matters, and we know it filters through into the real economy in ways that actually end up being permanent losses to the economy.
Sure.
Yeah, and I'm in agreement with that. I was on a roundtable webinar this morning, and there were 25 CEOs of a certain industry that were on that roundtable, and they all had that very same sentiment, is that they froze hiring, and they're starting to reconsider many positions that are within the organization, either for the initialization of AI, or even looking at maybe they just overhired in the past. So this could be a long-lasting impact. And the reason it's being triggered, part of it, in fact, is what's happening in the Trump administration, obviously with the shutdown. So I think right now the Republicans need to get to work. We need to come to some sort of agreement, get this done, because there are implications that could really roll this out into a much more destructive impairment on what we're going to see in terms of the economy as a whole. Here was another one that, because timing here is going to be very important, and this was CNBC talking about the shutdown and whether or not it would last longer. Take a look.
Sounds like you think this one, shutdown, could last longer than the one in 18.
Yeah, but it really doesn't matter, Carl. You go back and you look at the one in 18, and during the entire tenure of that shutdown, as I wrote about, the S&P was up 10%. So I think everybody knows this is going to get ultimately resolved. I don't think there's anybody who thinks the government's too small. And so I think people are going to go and focus on more important things to some degree, and I hate to put it like that, but they're going to focus on Q3 earnings that are about to start to get reported soon. They're going to focus on what's going on with the AI trade, and then they're going to focus on the most important, arguably, unfortunately, which is rate cuts, which has been kind of the stimulus, you could argue, since COVID, and if you want to go all the way back, since Lehman. And you're going to get a rate cut on October 29th, and another one probably on December 10th, and that's just going to keep this irrational exuberance alive until the rate cuts stop, at which point we'll have to deal with reality again. But right now, enjoy the ride. I think it's going to be great.
All right, so enjoying the ride. I want to go to the next clip because it kind of extends this topic further out of how much of an impact this is going to have on the market. And then I want to come back to that after that clip and give you guys some insights on where this job impact could happen. Take a look.
But you call it irrational.
Yeah, because think about it this way, right? We have a history of this. In the late 1990s, every internet company was going to win. Now, think about where we are today. How many have won in search? You got one. You got Google. How many won in social media? You really only have one. You got Meta. How many's won in e-commerce? You got one. That's Amazon. Now, if you look at the AI space, people think everybody's going to win. Everybody's going to be worth $1 trillion. But in the near term, when you've got rate cuts, when you've got animal spirits, people want to believe. Until people start to deal with that, the market, much like in late 1999 to 2000, I think keeps going higher, fueled by rate cuts.
All right, so to his point, what he's getting at is the dot-bomb era, and there was a lot of irrational exuberance in Silicon Valley. We saw multi-trillions run up. Most of that was private equity and also structured capital when you look at the VC side of things of how that was fueled. But I think this size is a little bit different. The other thing that we didn't have at that period of time was this complete decentralization and democratization of the internet, because the internet was barely born. So I think this time around, there's going to be a lot of other capital markets that will start to move. Tokenized stocks will play into this. We'll look at digital assets and digital currencies playing into this. All of that, along with RWA, all move in the right direction. This is good for markets, but the problem is this job issue. If we continue to see the pressure on that, and I think I'm going to make a prediction here, you're going to see some companies announce major AI interventions in how they're hiring and what they're hiring for. I'm going to guess that that's going to come out of the Q4 earnings calls, and you're going to start to see that's the extended impact. This could actually be a catalyst for all of that going forward. The other thing it's a catalyst is Bitcoin hitting 120K. Breakout is going to lead to possibly a very quick move to above 150. This is another analyst calling for that. And I think you got to look at that. It rose 6% in the last week. It recovered off, obviously, from above 118K for the first time since August. So it's already started to move somewhat in motion to recapture an all-time high. Here's my point. If we do see an all-time high in Bitcoin in October, the real question is, does November, especially around end of October, because you got to remember the Fed rate cut is going to happen end of October. What is November going to look like for the markets? Remember, last cycle we saw November was the actual run-up month for this, parabolic move on many of the markets. So is that the time to be watching for here? His conservative outlook to some other analysts who project around 200K. This is like, Tom Lee, who's called for 200K. Edward also predicted just over 50% chance of 3 positive upward months, which would be interesting. A 50% chance, still very high. He said the 4-year cycle remains relevant, but maybe self-fulfilling right there. And of course, at the end of the day, driving force is the institutional buying, number one. If that pivots down, then that would be off market there. If you look at the history of October, almost always up in the green. November, very healthy. And to a certain extent, December kind of half and half, I guess, to an extent. But this may change as we start to see institutional capital cycle through. And remember, you still have market structure coming in toward the end of the year, which again would be another catalyst for a move. Other things that are happening, Citi, of course, predicting Bitcoin could surge to 181 within the next 12. Kind of soft prediction there, but that still is very aggressive considering this is a lot of retail that would be looking at those kind of numbers. And Coinbase Bitcoin loans could hit 100 billion. I think this is way underreported by 2030 based on the uptake and the lack of the fact that we have not seen massive traditional capital and or traditional investors that are spending money out there on securities, gold, and other assets that now realize they can take loans on digital assets. That's a market that is still untapped and undelivered. So I'm anticipating that's going to be much higher. Other thing we're watching right now that's witnessing history is stock market futures are green again, with the S&P 500 now plus 39% since its April 2025 low. And if you look at the government shutdown begin just a day ago, the S&P 500 now pushing further into record territory. So it doesn't seem like there's any pullback. Bitcoin has not hit an all-time high. Gold has, and silver is trying to break through. There are so many big indicators here that we could see happen in the Q4 of this cycle. Is this the end of this bull run in Q4? Let me know in the comments down below. By the way, if you guys are not subscribed to the channel, take some time, step back for a minute. If you like our content, hit that right there, hit subscribe, and I want you to join the Diamond Circle. That's another thing you can do because it's our private group. And I send you guys an email every week. Sometimes I'll even give you my picks of what I'm looking at and the reasons why. So make sure and join down below. Looking at silver, prices have never ended this high after what we've seen right now, which was a daily RSI on silver officially exceeded 82, first time in 2020, since 2020. And it's only happened 5 times since 87. So could silver be in a very interesting spot? Go watch my interview with Andy Sheckman. It was about 2 or 3 weeks ago, and it was talking about silver and why we thought it was going to do a massive breakout. And here over the last 3 weeks, it has done that. And I don't think it's done yet, so be on the lookout for that. But that video will give you a lot of understanding of where silver is going. Silver is relentless. If you think you're late, you're wrong. We didn't even get started. This is the bounce we're probably going to look at right now as silver starts to come back off the top. I'll show you a chart of that here in a second. Another thing I want to hit on was the Ethereum price. Analysts see ETH outperformed the Bitcoin in October. Everybody's been saying this. Show me the money is what I'm saying. Show me the money. I don't know if ETH can do it. We still have a lot of downward pressure and selling pressure into Ethereum, and there are places that is driving that. You guys know who I'm talking about when it gets into that. But right here, Ethereum may soon lead the market. Once Bitcoin's current bounce slows down, it doesn't look like it's slowing down. The sequence could unfold with Bitcoin making its first short-term rally, followed by a pullback. I don't know. This is a lot of hopium, I think, for ETH right now, even though I think ETH will maybe get its all-time high. But do we get a performance? Remember, This is the all-time high that we're still trying to outdo since really the most recent one that just barely beat the previous cycle high. So if ETH is going to do it, it's going to have to happen pretty quickly. Other things you got to look at, ETH ETF spot about 19,000. This is, to me, is a little bit of a worrisome situation because there's so much good news here for Ethereum, but yet we're not necessarily seeing it on the charts. Granted, it is well over 4K right now, so I get that. Paul, yeah, what do you want? ETH is performing just fine. I understand that, but with the digital asset treasuries that continue to push at it and the front man, Tom Lee, out there pushing like crazy, you just can't go past this. I mean, Tom Lee's out there pushing for a 12 to 15K by year end. If this hits, this would be one of the biggest calls, I think, maybe in the history of Wall Street, if that actually hits. So mark this video right now. Here we are, October 2nd. 15K by year end on ETH would make Tom Lee the best investor in the history of mankind. That would be the case. Matthew Siegel, though, says the CME is going to get ready to offer a 365 24/7 because they got embarrassed the other day against Shane Copeland. And Mr. Duffy, I think, finally said, hey, yeah, we got to do something about these kids. They're running circles around us. Well, that was what happened right there. And they're going to offer around-the-clock trading for cryptocurrency futures and options, all coming in right off the presses in Chicago. So the Chicago boys are getting out there and learning their skills. Maybe we'll make a difference. Other news that is hitting is Swift announced their new blockchain-based ledger. This is happening with 30 banks. CBOS, at the CBOS event, here was Javier Tasso, who is the Swift CEO, talking about it. And he actually showed a demo of this whole model on 24/7 cross-border payments happening through Swift and, of course, the partnership with Linea. If you look at the banks that they're collaborating with, 30 leading banks. Let me kind of zoom in on that for you guys so you can see the entire list there. And this may be the end of the theory that XRP will be working with Swift. And does that mean that XRP now goes head-to-head with them? Maybe Brad Garlinghouse is planning to do that all along. We'll see how it plays out. Let's go over to the charts real quick and take a look at Bitcoin as it continues on its second major candle day, edging over 120K right now. Question is, do we start to see this start to get back to this near all-time high at 123.5? I think we're close, guys. I think October is going to be the one, and we talked about this yesterday on the show. I was talking with an analyst, and his call was an all-time high for Bitcoin in October of 140. Do we see above that 150 range in a near term as we lead into the Fed giving us another quarter basis point at the end of October? Let me know what you guys think down in the comments, but let's take a look at Ethereum. Ethereum, let's go there, and of course it's had a fairly decent upward trend. Let me see what that move has been from that dip that we saw around 3,800. Nice little 15% move. So if you were buying the dip at 3,800, kudos to you guys. You were in and looking good. We saw the climb after Tariff Day 2.0. Remember that, and the FOMC meeting, and where we have kind of come from since back in August. And then, of course, let's take a look at XRP. Holding her out right now back above $3, and looks like it could go into that zone of around 310 to 350. There's a couple analysts out there on the XRP side calling for an all-time high also in XRP above $4 in October. So if that happens, the XRP community will be hugely happy with that. Solana starting to come back after its dip, which went down to 192. And this was the place where I think everybody that was watching us was saying this is an opportunity. We may not see Solana under 200 again. And here we go at 230. Solana ripping back up to the top. Avalanche also starting to make its way, but a little bit more of a drudge coming off of that dip that it had, which was right around $27. Holding right now on a red day at around $30. So there's a lot of movement in the market, guys. And let me know the tokens that you guys want us to cover here in the comments down below. We try to get to as many as we can. I know some of you guys will throw out, all sorts of projects. Not everyone can we cover, but we try to get to as many as we can. Anyway, do that, and of course, jump into the Diamond Circle. Do that, it's free. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.
you.